I'll call the meeting to order. This is the Sweetwater Union High School District Audit and Finance Subcommittee meeting. Today is February 16th, and it is just 5 after 4 p.m. this evening. I'm just going to call out the people who are here so we don't have to do it. We have community members Dan Gutowski and Jerome Torres, fellow board member Nicholas Segura, and district staff Jenny Sacheld, Deanna Vicedo, and Carolina Zimmerman, Griselda Delgado, Janaea Court, Manny Rubio, Nancy Picone. And from our auditors, we have, and Athena Quarles is also here on the call, and Daphne Enriquez, and Elizabeth Reyes Velasquez. From our auditor group, Crow, there is Tim Kennett. I see people appearing as I'm calling out names. Elizabeth Sav and Kevin Smith. Did I miss anybody else from your group, Kevin?
No.
No?
No,
right.
You did not.
Oh, thank you. And we also have on the call Mark Skavarnov, our fiscal advisor from the county, and Dr. Alvarez from our instructional curriculum, and Gerardo Moreno is also on the call. Thank you. So we'll get started with a call to order and public communication. So, Deanne, do we have any speakers?
Yes, we have one speaker, Nick Marinovich.
Okay, it's okay to speak?
Yes, go ahead, sir.
Please. Yes, please. I submitted some comments in an email today, so I want to go over those comments in summary form. And as you can imagine, as a citizen going through this agenda, mountain of information, which really, frankly, generated a lot of questions. But in summary, in my reading of this, and maybe this will be discussed during the presentation, it seemed that the CARES Act funding and how the money was spent really had a more of a remote learning ledger side of spending money as opposed to an opening school ledger. And that's a policy decision, obviously. And it appears from the information presented that you can charge salary to the grant if you're doing tasks that are not within normal job description. Whether that's right or wrong is subject to discussion, but it is going to be providing general fund relief. And really, my comments are really in a series of questions as a citizen, kind of looking at how you're spending the money. What was the process for determining the priority for CARES Act funding, and how did you rank the various options, and why did you fund what you did with the funds that you had? Secondly, are the feds buying off on how you're accounting and charging, for instance, those accounts for salaries? Thirdly, what have been the trends in the CARES Act period before and after in terms of full-time equivalent positions in the district? In other words, was there a drop-off and a decline in FTEs related to the fact now you had grant funding? And this is the most important one of all my questions. What additional measures will be required to open up the schools? In other words, was money spent elsewhere that you now don't have to do the physical improvements in the schools? Fifth, what funds have been set aside for testing and contract tracing as part of safe opening? What are the metrics that measure the success or perhaps failure of some of the remote learning enhancements that you're funding through this CARES Act? And finally, how do you intend to prioritize in the future when you get additional federal funds, with CARES 2 that passed last December and any other stimulus money? So I guess in a nutshell, as a citizen, I'd like to see a little bit more information on the process you use to prioritize expenditures. And then from a practical standpoint, it would be really helpful to have a summary budget all in one place, where you're going to spend the money and why you're going to spend the money. So you can look at it in totality at one location as opposed to disparate locations. Thank you for listening to my comments.
Thank you, sir. There are no further public speakers. You're muted, Mrs. Hall.
Thank you. I want to recognize that Vanessa Garcia has also joined us. I don't believe I called her name before. So thank you very much for your comments, Mr. Marinovich. We'll go on to our presentation now on the 2020 audit. And for that, I'll give it to Dr. Sauckel.
Thank you, Trustee Hall. So I'd like to introduce the CROW team. As mentioned earlier, we've got Kevin Smith and Elizabeth Sav. They're going to be highlighting the 2019-20 district-wide financial audit. And then we will have Kevin Smith and Tim Knupp also then highlight the bond financial and bond performance audits. Very distinct roles and scope of work, so each auditor will be reviewing that information along with Kevin. What I'd like to highlight is we brought forward to this committee and to the board in September the 2018-19 audit. That did take us some time to prepare up to that point, but soon after that presentation, our work then commenced with the collective management team here on this call from Fiscal Services, along with our respective staff, in providing the necessary support to the CROW team, starting in the months of October all the way through January to this draft report that we're presenting today. So we've worked very collaboratively in providing the sample documents, any supporting information for the various scope of work that they've prepared for whether it's bond or the financial audit or on the federal programs and so forth. So Kevin will highlight, I'll defer to him at this point to go over the specifics and what the district has done compared to that report in September. They will touch upon a couple of findings and some improvements we've made in that area towards our progress, as we've mentioned in the past, towards that fiscal stability and fiscal improvement. And so Kevin will highlight that with the team. So I want to turn over to him at this point.
Thank you, Dr. Sauckel. And due to some limitations of my Wi-Fi, etc., I'm going to leave the bulk of the conversation or the presentation to Ms. Sav. But I do want to highlight a couple of key areas before I turn it over to her. As Dr. Sauckel said, really simultaneous conclusion of one audit and the beginning of the next. Although this is later than what is normally anticipated for a California school district, I do want to remind the district or the board or the audit committee that the deadline for this year's audit had been extended to March 31st due to the remote work environment and all of the different things that each of the districts are facing within the state of California as it relates to COVID-19. So we are within the time frame of what the state has called for. That's a testament to the hard work that your management team has put into place. We're also going to discuss the fact that there's a going concern continuing on the face of the financial statements, as well as a couple significant deficiencies. And as I shared with Chairman Hall earlier, it's really unique to say that we have significant deficiencies and going concern considerations and still consider this to be a good audit, but I do. Because of two primary reasons. We're going to walk through some improvements in the overall fiscal health of the district that does not factor in CARES Act money, because that really will affect fiscal year 21 versus fiscal year 20, as well as the improvements within the deficiencies. The ones that Elizabeth will go over, if you will recall, in previous years had been material weaknesses. We discussed with you at that time that management had really begun to identify a variety of areas where there was an over-reliance upon a general ledger system that just quite frankly is lacking with the true course. They had implemented a variety of manual internal controls. We did continue to see improvement and refinement of those processes, but as it still relates to a reliance upon that general ledger package, we deemed each of the deficiencies we identified to be significant. And as a general reminder, a material weakness is one that in the ordinary course of operations management, it is highly likely that management would not identify a material misstatement. A deficiency is just the lowest level of deficiency. A significant deficiency has a really funny definition. It's less severe than a material weakness, yet still warrants the attention of those charged with governance. Because of these underlying issues as it relates to true course and the ability to continue to rely upon your staff doing manual processes, we deemed all of these to warrant the attention of those charged with governance or this committee. So that would be kind of my prepared remarks at a high level, and then I'm going to turn it over to Elizabeth to walk through at a more granular level. Elizabeth?
Thank you, Kevin. Okay, so can you all see my screen here?
Yes.
Okay, thank you. Okay, let's get that to go away. All right, so let's just get started going through. We're not going to go through every page of 112 pages here. We don't have time for that. But we will absolutely touch on some items, and then at the end, please absolutely feel free to ask questions on any area that you would like us to emphasize, clarify, maybe an error in, a typo, whatever it may be. Please feel free to reach out to us, because as you can see, this is a preliminary draft. We have not issued the report at this point in time. We'll talk about why that is at the end as well. And what our final piece is to close this up. But again, please have your questions ready for us at the end. So here's our report, independent auditors report, and you can see here has our opinion paragraph. This is an unmodified opinion. It's the kind of opinion you would like to receive at the end of an audit. We had no modifications to make to it. As Kevin mentioned, there is the emphasis of a matter and a going concern paragraph here. This is similar to what you saw back in the 1819 audit report, but you will notice when you get to footnote 12 that this is referring to discussing the going concern and the substantial doubt, that the factors leading into this have been improved upon. So essentially the district is looking at potentially running out of cash in June 2021. However, because of the agreement that they've been able to set up with the county treasurer, that has been able to been remedied. However, because that agreement with the treasurer is not an official contract, an official line of credit, if you will, from an auditor's perspective, we can't rely upon that as saying they absolutely have a contingency plan there. If they did, that would possibly change the way that this opinion looks. But all in all, definite improvements over prior year. Additionally, you'll notice that there was an emphasis of matter regarding a restatement last year, and we do not have a restatement in the current year, which is definitely positive news. Last year, we did a lot of cleanup work. Management did the bulk of that work in working through that process. So like Kevin said, significant deficiencies, going concern, but as you might all recall from our meeting back in September, significant improvements made by your management team. Continuing down, you will see management's discussion and analysis. This gives a little bit more detail as far as activities of the year, talks about the current year happenings, just put things in a little bit more layman's terms, and allows management some additional time and opportunity to discuss various areas of the district. So skipping past that, let's see, tried to bookmark these so I'm not scrolling and making you all dizzy. So here's the statement of net position. This is the first financial statement. This is your government-wide financial statement or balance sheet, if you will. So this includes all of your funds collaborated together And then it also has your long-term assets and long-term liabilities all factored in to give you a whole picture of the position of the district as of June 30, 2020. So once again, we've got our net position down here, and you can see you have a positive net position overall, but this negative number definitely stands out to a reader, right, as well as the board member. Just to pause here and talk a little bit about that negative number. This is not the driving force behind the going concern. This is actually, unfortunately, a fairly common position that a lot of governmental entities as well as school districts find themselves in, because when GASB 75 and GASB 68, two accounting standards that came out a few years ago, required the full level of the pension with CalSTRS and CalPERS, as well as your OPEB liabilities to be placed on the financial statements. That definitely tipped the scales upside down when it came to net position. So fortunately, your net position overall is still in a positive position, but the unrestricted was definitely driven by those pension and OPEB liabilities that make up a good chunk of that liability number. Further down, you'll be able to see the actual breakout of that amount of what's specifically just for your pension liability, which is not something that is due next year. It is something that is projected over the future years for all of your employees and retirees. And then getting down into your statement of activities, this is the government-wide income statement, if you will. It's a little bit difficult to read. I think it's not, it doesn't come in a common sense way, in my opinion, but you've got all of your expenses listed here, program revenues over here, and then general revenues, or the bulk of your revenues, down here. And it's all listed out by function. And you can see here, change in net position, you had a $20 million increase in your net position year over year. Which in the next couple of pages will be more clearly laid out why that is, but that's, again, very positive and improvement for the district. So that's the end of the government-wide portion, and then here's the fund financials with the balance sheet. And this is probably a little bit more familiar to the board as far as what you're used to seeing with by fund level. So these are the amounts that would have been presented in your unaudited actuals, with some exceptions, which I'll talk about in a minute. But overall, the biggest number to point out here is this large fund balance in your general fund. And not only that, a large unassigned fund balance. So this is absolutely the direction that the district has been striving to go. And with your new management team definitely pushing this direction, is a huge improvement for you all. I'm going to skip past this and come down here to the income statement portion of the general fund. So you can see your total revenues, total expenditures, and the significant increase here of $26 million in your general fund balance. You started the year at 800. And ended with $27.5 million. A very common question that we get at all of our school districts is, aren't these increases, related to the CARES money or the federal money that's come in? And the answer is no. The CARES money is not represented at all in the 1920 financials. The California Department of Education actually apportioned and allocated those funds for 2021. So recognition of those revenues are not represented in here at all. I think a lot of the improvement that you'll see here in that large increase in your fund balances, two things primarily. It's one, all of the work that's been done by the district trying to hone in expenditures and make choices for the district to move into a positive direction, as well as closure of schools and some one-time savings that have occurred. So just wanted to point that out because that is something that we get asked a lot of times when we're presenting to boards is, where's the CARES money? And that is something that will be addressed in the 2021 audit, but there are no expenditures or revenues that are represented in the 1920 financials. Okay, so I'm going to skip down to footnote 12. This is your going concern footnote and the draft thereof. You will notice that it is a couple pages shorter than last year. So again, just a lot less to discuss. And it talks in here about the resolution to borrow money from the treasurer based off your property taxes and kind of tiering and handling that cash flow. So again, a lot of improvements made on the side of the district. They're partnering with the county treasurer, has really helped in that facet. And the real reason that this paragraph is still here is because that formal agreement with the treasurer is not necessarily in place, and that agreement could technically go away, even though we don't anticipate that happening. All right. And then skipping down to page 85 of 112. I wanted to talk about this because as a audit committee member reading through the draft, this might draw some attention because typically you don't want to see any audit adjustments popping up in your funds from prior years. And as you recall, last year we had a significant number of audit adjustments that were either management proposed as well as Crow proposed. And so I just wanted to kind of clarify this because the state requires that the district explain any differences between what's in the unaudited actuals that were submitted to the board as well as to the county and then the state, and what was actually reported as the ending fund balance in the audited financial statements. So this is a breakdown of that change. But as you can see over here, these are all from prior year's audit adjustments. And the reason for that is, if you recall, we didn't issue 18-19's audited financials until well into the 2021 fiscal year. So those audit adjustments were not able to get backdated basically into 1920's fiscal year. So that's what's causing these changes. But we did not actually have any audit adjustments, if you will, in 1920's audit that were found in error. These are all just pushing through the changes that were found in the 18-19 audit, if that makes sense. Okay, and then moving down to the schedule of audit findings and question costs. This is always a nice summary to come down to see, final results of the audit. For those of you who have been on these committees, you know to go to the back of the report first before starting at page 1. And so here you can see financial statements. Our intent is to issue an unmodified report, as I just mentioned earlier. And this is really where we see our improvements. Last year, we did have material weaknesses identified, and this year we do not anticipate having material weaknesses reported. We do have significant deficiencies, which we will go over in a moment. We did not have any non-compliance material to the financial statements that were noted. For the federal awards audit, so not only with the financial statement, we also perform a federal award or single audit for the district. We had no material weaknesses identified in that process, no significant deficiencies. And we also are intending on issuing an unmodified opinion. And then down here, it shows you what were the major programs that were selected and audited this year. And those are listed here. So we looked at your child nutrition cluster. We looked at your Title I program. And we also looked at your 21st Century Title IV program. Another common question we get is, how are these determined? And we don't just pick these at random. We have a dictation from Uniform Guidance, or the federal government's audit guide, essentially, of how to select programs. So any program that's over this $1 million threshold has to be audited every 3 years. So that's what helps drive, how we determine what we're going to test. Okay, and then auditee qualified as a low-risk auditee, and here we're saying no, you are not considered a low-risk auditee. And we oftentimes get questions on this as well. And one of the factors that's essentially driving this to be a no is the fact that you had material weaknesses reported in the prior year. So we have to look at the last couple of audit years, and if there were material weaknesses, then this is automatically indicated as a no. What that means is that we are required to audit at least 40% of your total federal expenditures that's on your total schedule of expenditures of federal awards. So if you were a low-risk auditee, we'd only have to make sure we had 20% coverage, but because you are not low risk, we have to make sure we audit 40% of those expenditures, which is a significant amount. All right, and lastly, your state awards. So we issue an opinion over financial statements, we issue an opinion over federal awards, and then we also do an opinion over state awards. And your state awards is dictated by the California Audit Guide. So the state of California issues an audit guide every year and tells us what areas we must look at. We don't just pick what compliance areas to look at. If you're ever curious, and want to know what exactly that entails, let me scroll up here. I didn't bookmark this one, but I feel like this is helpful to see. This is our state compliance opinion, and this is the list of areas that are required to be looked at in the 1920 audit guide. So if there is a yes, that means we perform procedures over it. If there is a no, see below, that means we did not perform procedures and we're explaining why that may be. So for example, charter schools, no, see below, it's because the district doesn't have any dependent charter schools, and we move on. So I point this out because getting an unmodified opinion for any school district is, I think, an accomplishment, and it's not just a management business office accomplishment, it's a district-wide accomplishment. Attendance reporting, independent study agreements, continuation education. I mean, we're talking about attendance clerks, secretaries, teachers, independent study agreement, people who, they're monitoring those independent study agreements. All of these different areas, the state of California does not allow for materiality. So even if we had let's say one absence note at a site that was found as improperly accounted for, we would have to report that in this audit, even if it had no fiscal impact at the bottom line. And then we would have to qualify your opinion. That's just an automatic dictated by the state of California. So the fact that we have an unmodified opinion means that we found no errors when we did all of those different compliance areas. So anytime a district has an unmodified opinion, it is a challenge to do. It's not straightforward. So I just like to make sure that you all are aware of that, and that's commendable, not just with your business office, but district-wide. It's a team effort. All right. So moving into the findings, if you recall, and there is a section below this that talks about every single one of the audit findings we had last year, what the standing was, if it was a material weakness, significant deficiency, regular deficiency, and then was that implemented, partially implemented, etc. So you'll be able to take a quick look at that and just see the significant improvement from that audit up to this audit here. So here you'll be able to see financial reporting. And if you recall back to 1819, this was a material weakness. There were, I want to say, in the ballpark of 50 audit adjustments that were identified through these reconciliation process that your management team went through. So although there were no audit adjustments, like Kevin mentioned earlier, we still consider this significant because the financial system of True Course really does allow for susceptibility. and your management team has had to put into place manual controls to overcompensate basically for those failings. So because of those controls that they've put into place, when we did all of our audit procedures and selections and testing, we did not find any material errors through that process. So we are able to reduce this from a material weakness down to significant deficiency. But we still feel like this is very relevant and very important for the board and the audit committee to be aware of. And then this section here is management's response. We do indicate in our opinions that we don't actually audit the response and give an opinion on the response, but this is essentially what they're saying they're doing to fix that. And definitely this last paragraph here will be a common theme you'll see. Successful implementation of the new financial system is really going to be a key item going forward. All right, and number 2, we have significant deficiency over capital assets. Again, this is a significant improvement over prior year. This is where one of the significant restatements took place. You have a very large amount of assets that are being tracked manually on in Excel, and in the district's trying to do their best to keep all of that reconciled between the system and an Excel spreadsheet, which leads to, anything that is done manually is more susceptible. So through our process, we did not identify any material errors, but because of the dollar amount of this balance, the capital assets that you're monitoring, having a robust financial system is crucial going forward. So I know management concurs with that. They've indicated their response below, and that is absolutely something that I know they are taking into consideration as they are working with their new financial system implementation team. And then let's see, significant deficiency number 3. This has to do with your salaried employee payroll. This is a repeat finding from last year. The district was able to make some of improvements, but they are very limited in what they're able to do within the system. So again, this is going to be repeated from last year. Essentially, it's a result of the downfall of TrueCourse and its inability to capture and automate certain information as it then goes over to the county office system. We did not identify any actual material errors through this process, which is why this is not a material weakness, it's a significant deficiency, but we do believe it merits, your attention so you're aware of it. Okay. And then last deficiency is relating, it came out of the bond financial audit in particular, but because your building fund is a major fund within these financials, we thought it would be important to include that here as well. But Kevin and Tim can talk more specifically into this finding during the bond portion as well. We had no findings for federal awards and no findings for state awards. And then here is the status of prior year findings. So you can see all of the findings that were presented in the 18-19 audit and what the current status is of those. So as far as finalizing this audit, there is one key piece that we are waiting on. Let me just go back up to here. So we do have a meeting with ORIC, your SEC counsel, on Friday. And we can't issue our opinion until we have that conversation with them to provide us an update on the SEC investigation and inquiry. We are not anticipating that any of their reports will come back and tell us something that we need to pause. But if they do provide us information with something that merits pausing the audit, we will need to do that. However, we don't anticipate that occurring. So after all of that, let me just pause and see if there's any questions that I can answer. Or Kevin, if there's anything I missed, if you're still online, that you would like to add?
Thank you.
I am.
Okay.
No, Elizabeth, I think you teed it up very well.
Thank you, Elizabeth, for that presentation. We very much appreciate it and appreciate you're walking us through some of the significant pieces of the audit. I'll call on our committee members to find out if any of them have a question. If you have a question and you're able, please raise your hand. I know that there's that function. All right, Mr. Gutowski, go ahead.
Yes, Elizabeth, page 25 in the PDF.
Okay.
I had some questions regarding the debt servicing that was noted on the income statement. And I know we have the debt servicing with the county, but you're going to see three different, the different columns for the debt servicing. Can you go over each one of those in the interest that's being paid?
Yes. So in your general fund, the debt service principal payments here are relating to your capital leases, as well as to the QZAB bond that you hold. And then the interest that's being paid is in relation to those two line items. This in the Fund 49 or the Melrose Fund, it's such a long name. I don't know why we should just say Melrose Fund. I feel like that's easier, but these principal payments and interest are in relation simply to the Melrose bonds. And then in the all non-major funds, this is really out of Fund 51. So these are your GO bonds and the interest relating to those GO bonds. And I think the interest number looks so large, mostly because of the capital appreciation bonds and the accreted interest related to those and some of those payments. So those are the three different buckets that they're being paid out of for those different types. And I could just scroll up here quickly. So here's the GO bonds and special tax revenue bonds. So those are your Melrose bonds, lease revenue bonds, and the COPS and the QZAB. So this is all reconciled together and then presented down here. Did that answer your question?
Yes, it did. I just wanted to break down it.
Yeah.
And then in addition to that, we had the 39.3 million with the county treasurer.
Yes, and so that will be presented in a little bit different format. I'm sure Jenny could provide more color on that, but I believe that ending balance is related into 2021, so that wouldn't be represented here. And I believe that would be a current, are you referring to the county treasury borrowings for cash flow? Correct. Okay, yes. Yeah, so that's not going to be part of your long-term debt service. That's going to be more of a short-term cash flowing. So that wouldn't necessarily show up here.
And that was paid off as of June 30th because it was paid, that borrowing is a little over 70 million in 2019-20, and it's paid according to the resolution with the County of San Diego. It's paid with the last property tax payment in April.
Excellent. And then one last question for Dr. Sockeld. As in terms of the deficiencies that we had in this audit, do you feel like any of them has been related to the attrition of staff and the early retirement program and not being able to backfill?
No, I think we've spent the last 2.5 years putting a lot of systems and structures in place to help improve going forward. I think a lot of it, you heard the theme with Kevin and with Elizabeth, is really true course. I think once we get that migrated and behind us, that system, and transition to the new Infor system, I think we'll see some great improvements, because the goal will be to remedy this and not have these be findings. So I really believe it's the structure of the financial system. And the manual, Elizabeth highlighted a lot of the manual processes we have in place, but I don't think from a staff standpoint, we've done a lot in the last 2.5 years to build capacity to loop in staff into that problem solving approach and working together. So I think we've got that from a stability standpoint. It's the tools we're utilizing, which is true course.
Excellent. Thank you so much. No more questions for myself.
Thank you, Dan. Go ahead, Mr. Torres. You're next.
Can everybody hear me?
Yes, we can hear
Okay,
you.
perfect. All right. Well, as always, a great work product and a great oral presentation. I want to expound on something that Ms. Saab talked about when she was talking about the increase in the general fund year-end balance from 1819 to 1920. And you elucidated that oftentimes the general public thinks that's attributable to the CARES Act funding, and it is not. That said, however, is that there's no expository analysis within the draft financial statement or the audit that really fully explains the increase in the general fund year-end funding balance. Now, part of it is explained in the schedule that's on page 79 of your audit and page 92 of our PDF that takes it from 25 million to 27 million because of the year-end funding adjustments from 1819 to 1920. But that only accounts for about a couple mil. So there's like basically $25 million that there's neither in the management discussion and analysis or otherwise that really would help educate the layperson or any interested person as to how did we get from $818,000 to now $27 million in a general fund ending balance. Are you with me? And I think it would behoove the district working with the auditor to include that narrative. So that way, again, making sure that there's no suspicion, undue suspicion from anybody as to how do we get to that number. What was it attributable to? Was it business processes? I mean, what was it? Again, if you have to go through the various schedules and then kind of deduce how it came about, okay? But I think for the purpose of the general public, I think staff would be wise to working with the auditor to put in some expository analysis, maybe a half a page in the MDA as to how do we get there. You with me? Mm-hmm. So that's a constructive criticism. Mm-hmm. Now, with regard to note 12, well, I'm glad you mentioned about the SEC, okay, that you're waiting for some kind of communique from outside counsel about the SEC investigation. And you noted that in the going concern. But what's not in the going concern is any mention of the referral of the FICMAC audit report to the San Diego County District Attorney, as well as the State Controller and the State Superintendent of Public Instruction. And I think that should be in there. I think the school district, again, being transparent, should mention that fact because it may not have any materiality as to quote unquote the numbers. Still, it's a going concern, and there may be either direct or indirectly a consequence that may affect the numbers, but who knows? But I think if you're going to bring up the SEC, then I think you should bring up the referral of the FICMAC report to the to the San Diego County DA. The last thing is that I'm glad that there was some discussion by Dr. Salkel about True Course, and actually Mr. Gutowski talked about it too. And I just want to make sure that with regard to the significant deficiency with regard to salaries, employee payroll, which is on page 94 of your financial statement and page 108 of our PDF, that the narrative there, the condition, cause, effect, that in and of itself, that I want to hear from the auditor and Dr. Salkel, that those deficiencies that are outlined there and discussed, you do not see, because we're migrating away from True Course, those issues becoming a material weakness. correct?
Dr. Salkeld, do you want to address the question first and then?
So yes, Trustee Hall, I can mention here in regards to this particular finding, we've actually met with the county office. It was the prior audit team, which included Elizabeth and the prior partner at the time. We actually walk through, it's what, and Elizabeth, you can chime in here too, it's what transpires on the front end with the district in capturing the timekeeping, how the checks and balances come into play, the nuances with True Course where we don't have that robustness and tracking changes, documenting changes. We have worked with the True Course consultant to provide a report to Vanessa Garcia and her team there in the payroll department to create that documentation. But then it's the handoff to the county office when we give them the file, because they ultimately process the payroll on behalf of the district. And so we met with Elizabeth, again, I want to say it was probably over 2 years ago, with the county office team there, and they brought a lot of their fiscal, their IT, their payroll department staff to walk us through what are their processes, because those are the questions that the CROW team was asking for. And then they alert, what are exceptions, what are things that they send back to the district, what our payroll team reviews, like what I review, what I'm notified of certain dollar thresholds, things like that. So I think really where the opportunities that have come in is, again, through that implementation of the new system, is us developing that intake of the data from the school sites, from the departments, that review process and how it's documented.
Yeah, because again, I'm looking at the narrative. For example, the district does not have evidence to support the review and approval of the payroll registers prior to upload to the SECOE system, and so on and so on. So just succinctly, is that you do not foresee that these deficiencies will become a material weakness in this transition from True Course to the new system, correct? That's all I need to know.
Well, the goal, as I mentioned before, with any of these items here, we want to remedy this. So again, with the expectation with the new system, is that this particular finding would go away.
Okay.
That we would build much more robust structures to document, and to where then this would satisfy when we engage CROW in that review, that they would be confident with this information as well. Our goal is to remedy this.
Okay. All right. Well enough. Thank you.
So a follow-up question
Can
on that, Dr. Salkeld. Do you mind, Mark? I'm going to talk right now. Thanks. I would say that this year, my ask would be, what are you performing? What procedures have you put in place so that those, at least it remedies somewhat, because we're definitely not into a new system yet. So what are you doing this year? Because this year's audit has not been performed yet. So it could come out as another weakness in the audit, but I would like to understand what is being done this year.
Yeah, and you're correct, because we do have those system limitations. So as we're already in the midst of doing our 2021 work, this may remain here till we're fully implemented. We're anticipating that after July of the new fiscal year, 21-22. So again, what from a capacity and what's available, and I can have Vanessa, she can chime in as well, is we're limited by this report. These are the tools that we've worked with the consultant to generate this report. We work closely when we do our budget meetings with our school staff and our department staff. We share with them the importance of certain timekeeping considerations, the approval process with their principal or their director. So we highlight those components of it. But really from a report standpoint and to this particular item, this report that's been developed right now is a tool that we have that is going to carry us through this year.
Right, and I appreciate that. I appreciate the work and the eyes on it. And I really am I know that the board is really asking for updates on the implementation of the new systems, because we understand how crucial it is to the health of the district moving forward. So thank you. And Mark, did you have something you wanted to say?
Chairman Hall, it was Kevin.
Okay, Kevin, go ahead.
Two quick comments, and one of them, Dr. Sockeld just really you addressed, Trustee Hall, and then Dr. Sockeld also addressed. I can't predict the future from whether or not something will become a material weakness. I believe, though, anytime you put in a new system, it is rife with risk, whether it be project management. The installation of the system is absolutely critical. So the continued monitoring by management as you can. But all system implementations have risk. Do I believe that management is currently managing and mitigating those risks? Based upon our oral interactions, I do. And as the closer we come to implementation date, we will become more involved. The other thing I was going to say is why this is payroll is huge, but this is a process control that we believe should exist. But my evaluation of it and the criticality is not as great as it was in previous years because of the robust nature of some of the reconciliation procedures also put in place. An inability to monitor payroll and being behind on your cash reconciliations, that's a recipe for disaster. Having strong, robust internal controls over the cash reconciliation process mitigates things that could go wrong in this area. So as other improvements have been made, it had a more dramatic impact upon this finding than per se anything they could do right now within the limitations of TrueCourse. Does that make sense?
Yes. I think it's key, Kevin, and Dr. Sockeld as well, that you have to understand where you are when you move into the new system. You have to have details on what different resources you have and what the balances are. And really, that's key to make sure you match them up when you go into the new one and that it's tracked very carefully, continually. I mean, I think in one of these items that I read was there was a mistake where somebody had the wrong CFA number or the CFD number for the federal program, so it gave some irregularity in the amounts and how they were recorded. I think that's all those little pieces have to be very well documented before and after you transition, so that everything is really key and really clear and it's reconciled. And then monitored as you move forward, because mistakes are made, garbage in, garbage out. It's always true that's key. I had a question on page 50. It was page 50 on the one when I reported out, but it's on the notes to financial statements under note 11, and it said it's about contingent liabilities and program monitoring, basically compliance monitoring by the feds or the state departments. If they disallow expenses, so that would mean we wouldn't get reimbursed for those expenses. So it says it's believed that any required reimbursements would not be material. Can you tell me what the materiality threshold is for that type of activity?
So it would vary depending on the opinion unit that we're talking about, and we wouldn't disclose that materiality threshold.
Okay.
But typically what we've
just
seen with these audits, it's not something that rises to, it would probably, sometimes we've seen it where it's material to that particular program, but not necessarily to the district overall, or necessarily to the general fund, which is where most of those state and federal funds pop up. But,
yes. All right, thank you. Mm-hmm. And I wanted to also comment on that. I'm glad that I know that the significance of the payroll and the recording of payroll and the timekeeping and all those different, somebody can make a mistake when they enter in even where it's supposed to be charged to. Mm-hmm. So we want to go in behind that and correct it before the payment gets made and it hits the general ledger. So I think that's where some of those little nuances come in. I really appreciate that it's being looked at and monitored, and really look forward to how those processes will be authorized. Who does I noticed in several places you were talking about somebody other than the person that's actually doing the work needs to review it and kind of audit it. Would that role be the internal auditor? Is it more the supervisor, manager, director of a specific department? So within the chain of command of that particular employee? Or is it an internal auditor going and doing all these looks on ongoing reviews?
Yeah, are we talking about payroll, or we're talking?
Well, yeah, payroll. There was payroll and maybe some of the other accounting.
Yeah. Typically within like payroll or the accounting functions, it's something within the business office, or if it's a payroll, you're talking about timesheets, making sure whoever's preparing it, that you've got a supervisor reviewing it and approving it, and so not necessarily an internal audit function.
Okay.
Yeah.
That's what I wanted to clarify. All right, thank you. Mr. Torres, I see you have your hand up again.
Yes, if I may, Member Hall, is that just to kind of follow up on the discussion we were having among us between Mr. Smith, Dr. Salkeld, yourself on that deficiency on salary employee payroll. I think it might, again, a suggestion is that the auditor and staff may want to work together on kind of tweaking the language in there, because when you look at the transition from the finding from the prior audit, which was referenced on page 117 of our agenda packet, there's no discussion, there's no bridge between how really bad it was and how we're improving. But yeah, there are some deficiencies. I think it might, again, because I'm just trying to save off any undue criticism, is that you might want to work together to talk about what has been improved, recognizing there's still some problematic areas. But hey, we were at A, now we're at L, and we're trying to get to Z, and just a little bit more elaboration I think might help you guys, okay? That's it.
I'm not sure I understand, but go ahead. Do you have anything to add, Elizabeth or Kevin?
Trustee Hall, this is why we present drafts. We will circle back with management, discuss this finding as well as the MD&A. Trustee Hall, the other thing, and I agree with Elizabeth.
Always approach management with those things that might not be material, but might cause you to concern and couldn't possibly not be enough to put into this audit report necessarily. If it was significant, it would be included. I understand.
Correct.
I appreciate that very much. And I appreciate you circling back with management because, yeah, necessarily just to have that discussion about any changes that might be necessary. All right. So are we done then? Does anybody else have questions on this financial audit of the district? Mr. Segura.
Yeah, I didn't have any questions, but I would like to thank everybody for the presentation and walking us through that. And I noted the pages that you highlighted, and I'll print those out, so I don't got to print the whole thing out. But I appreciate that, and Ms. Shua, what I really appreciate is you pointing out a number of times the significant improvements by the Sweetwater district, the whole team, and I know Dr. Salka has done that since she's been here, and I just want to tell you I appreciate you saying that, and I will note that at the next board meeting. And thank you to you, Dr. Salka, and your whole team.
Yes, thank you. I mean, I think that's what I understand as well, is that while there are deficiencies, we're well on our way to correcting them. And we hope that in the future, we'll have, a budget and everything that would be considered where we won't have a note 12 saying that we have a concern about us being an ongoing institution. That's what our goal is. Hopefully and you know, COVID is what it is, right? I hope you're doing well there in Texas, Kevin, because I understand the weather's just really bad. Hopefully your heater is working well inside your home, but I think, you know, we don't know some of the uncertainties in life that occur, right? But one thing we can know, we're on the right path and we're moving in the right direction. So thank you for that. And thank you for the work. So now we'll move on. If there's no other questions on this one report, we'll move on to the Propo financial and performance audit. Dr. Stockhill?
Thank you, Trustee Hall. On this one, what I'd like to share is the Crow team, both Kevin and Tim, did share with the CBOC on January 20th, the draft reports. So that information has also been provided to them for review. And so they'll be highlighting the performance audit, which is in alignment with the Proposition 39 requirements, and then also the financial component that's required. And Elizabeth provided a little bit of a transition there, a preview of one of the findings. And so both Kevin and Tim will highlight that for you.
Thank you. And very similar, I'm going to turn it over to Tim. As Trustee Hall, as you said, I'm struggling in Texas with Wi-Fi and heat. So I'm going to turn it over to Tim. But again, I would highlight a couple things before we go into the presentation. This involves not just finance staff, but those in charge of construction. We rolled in from one audit right into the second one in 2 years, kind of all within 6 months. So we have, I think your staff would tell you they feel very audited and are ready to get back to a more normal time frame. We did have one finding. It's somewhat unique, and it is also clearly immaterial to the district, but because we have reporting requirements as it relates to just the Propo funds, it was included as a finding in the other packet, and Tim will go through that as well. Very similar to last time. The findings that we discussed within the school district don't necessarily translate to the Propo funds. The Propo funds, both through the financial statement as well as the performance audit, Tim is going to give you a very good report. So we'll walk through that as well. Tim?
Okay, and let me know when you guys can see my screen. Okay, perfect. So I'm going to start with the Proposition O financial statements. First off, I want to talk about a couple things in our opinion. Again, we are expecting to issue an unmodified opinion, which is the highest level of an opinion you can get. It's what you want. I do want to talk a little bit about the emphasis of matter paragraph directly below our opinion here. It is a little different than the one in the district report. It's fairly standard for any time that we would issue a report on a subset of an entity's financial statements. And really what this says is that these financials are only have the activity and balances of the Prop O general obligation bond funds. They are not the district as a whole, and they are definitely just a subset of the district. Again, normal language that we would have on any of our bond audits for any district in the state of California. Moving on, this is your balance sheet. As you can see, most of the assets, $43 million or so, are in cash and investments. The other activity, both in receivables and accounts payable, are fairly limited, with a fund balance of just over $43 million. Moving on to the statement of revenues, expenditures, and changes in fund balance, what is more commonly known as your income statement on a commercial company. You have revenues of about $900,000 in interest income, just under $4 million in total expenditures, for a net loss of about $3 million. This is pretty common in any bond program in years where you don't issue bonds because you're spending down the money of the bonds that you've already issued. So pretty common to see a net loss. Nothing real unstandard or not standard in the notes to the financial statements. Note 1 is just significant accounting policies, a little bit of light reading if you can't fall asleep at night. Note 2 just talks about the bonds that have already been issued and the requirements for the bonds. Note 3, you can see your cash and investments, and as you can see, about $43 million of the $43.3 million is held at the county treasury, with about $300,000 held with a fiscal agent. Construction commitments and some interfund activities. And then I will go down to the finding that Elizabeth mentioned earlier. And really, this is for one of the 26 non-payroll expenditures tested. We identified that the expenditure was recorded in the incorrect fiscal year. And really what that means is the expenditure, it was a valid expenditure, it was for a valid purpose, but it was literally just recorded in the wrong fiscal year. It should have been recorded in the 18-19 fiscal year, but just due to timing and when the district received the information from the County Office of Education, it was recorded in the 19-20 fiscal year. That expenditure was just over $88,000, not material to the Proposition O statements, which is why it is just a deficiency, which is the least severe of the 3 levels of deficiency, where you have material weakness, which is the most severe, significant deficiency kind of in that middle, and deficiency being the least severe. And that's really it for the Prop O financial statements. Do you guys want to pause there and have questions about that, or do you want me to present the performance audit first? I'm good with either way, whichever works for you, Trustee Hall.
Well, I think if someone has a question, I don't see any hands raised for this audit, but I would prefer to do it now if they did.
Okay.
So if seeing no hands raised, we can move on to the performance audit and we'll consider this piece completed. And I just want to say thank you. I like the light reading comment. That was pretty. Thank you. Go ahead with the Prop O performance. Thank you.
Sounds good. This is the Prop O performance bond. There again, we're going to go down to our opinion. The opinion here looks a little different because it's a performance audit, but really this last paragraph is what I want to draw your attention to, and it's really another unmodified opinion, where the results of our test indicate that in all significant respects, Sweetwater Union High School District met the objectives listed on pages 4 through 10, and the expended Proposition O general obligation bond funds for the year ended June 30th, 2020. I'm going to go through, well, this is kind of background information about the bond program over the next couple pages. I'm going to kind of go through one objective and kind of how the report's laid out. And then I will stop for questions. I figure that it's not a good use of everybody's time for me to read the entire report to you, since you have it in your packet, although I would be happy to answer questions about anything in the report. So as you can kind of see here, each section is going to start with an audit objective. And it's very clearly determined here. This one specifically is determine compliance with the public contract code related to bid requirements and district policy. Then the next little section is procedures performed. And this is really what we did for the audit and to determine compliance with that objective. So here we selected 2 public works contracts out of a total population of 5, comprising a total value of about $1.7 million from the fiscal year July 1st, 2019 to June 30th, 2020. We tested compliance with the public bidding and contractor selection requirements set forth in California law, including the public contract code as well as district policy. The bullets there show you the attributes that we tested, which is the completion of the 2-week advertising requirement, existence of bidder security, selection of the lowest qualified bidder, board approval, and then compliance with the disabled veteran business enterprise participation goal. You can see in the little chart the 2 projects that we selected. And then you can see the conclusion, which is the results of our test indicate that in all significant respects, the district was in compliance with all applicable sections of the public contract code and district policy related to bid requirements. The report continues on like that throughout the next 14 pages or so. Again, more than happy to go through any section or answer any questions anybody has.
Thank you, Tim. I really appreciate that. Does anyone have questions? I don't have any. It's pretty clear, the information. I don't see any hands raised from our committee members, so seeing no questions, I'm going to say thank you very much for your work. I thank Janaea Quirk and her team for doing good work and keeping us on track with our Propo facilities projects, and we appreciate that. Thank you. Thank you all. Really appreciate you all. Thank you. Dr. Sawkill?
Thank you.
Yeah, I'd like to echo the same points you just mentioned, Trustee Hall. Appreciative of everyone's work, particularly here with Janaea's team and the facilities and construction team, and with working with Crow very diligently. And so we look forward then to bringing these items with the committee's recommendation to the board next Monday. Right, and hearing no objections to that, I think this committee will recommend, is that correct? Mr. Gachowski and Mr. Torres and Mr. Segura, that we do stand behind this as a recommendation. The board approve or accept this. Right. Thank you.
Motion to recommend.
Right. All right. We have a motion to recommend by Mr. Gachowski. Do I have a second?
I'll second.
Okay. Thank you. Thank you all. And I hope you all have a good evening. And we have business to continue with this evening. So, but all of you can enjoy yours. Good night. Thank you.
Thank you.
Thank you.
All right. So now, thank you. Now we'll get our CARES Act update. Thank you very much. Who's going to start us off? Is that you, Dr. Sawkill?
Yes, Trustee Hall, that'll be myself and Dr. Alvarez, and at key point, Dr. Aguirre as well. So I think as Carolina pulls up the presentation, I would just like to share there's also a few exhibits that we included with the agenda item. So we'll be touching upon those. She'll be toggling between the presentation and those exhibits as our reference, as both Dr. Alvarez and I go over specific slides. And again, this item we're bringing forward because we know that there's been questions, there's been inquiries. The committee have suggested we bring this forward to provide context on the CARES Act funding that came about, in mid to last year as a result of the pandemic and COVID. So I'll just wait for Carolina to pull that item up and we can go into the specifics. And so if Carolina, you could go to the next slide, please. So in terms of an overview, what we'll be reviewing this evening is the CARES Act funding. What are the different components how the timing of when those dollars are to be spent by, and some recent changes that came about through the legislation at the federal level in late December. And then the nexus with that funding and the learning continuity plan. Dr. Alvarez will go through those specifics there because a lot of that programmatic piece tied to and provided the roadmap to the alignment with the funding. And then the last component is the compliance. Because as you've heard the auditors mention, our K-12 audit guide for 2021 will have information regarding that aspect. We're still awaiting the audit guide to be finalized. We anticipate that here in the next few weeks. And then we also have our federal program monitoring that's upcoming in the next few weeks, and Dr. Alvarez will touch upon that as well. So these are three key components that we wanted to share with the committee and the public in terms of providing some context with those dollars. So Caroline, if you can go to the next slide. So these are the different categories of the CARES Act funding that we received in different stages as a district. And a lot of it tied with learning loss mitigation as being one of the key focus areas. So as you can see here, there's different components here. The Governor's Emergency Education Relief Fund, known as the GER Fund, that has a specific resource, and so we've documented. These resource numbers are provided by the California Department of Education for us to track the dollars, whether it's revenues, expenditures, because that ties to one of the exhibits we'll touch upon here with reporting that we have to submit to the California Department of Ed. And so as I go through these items, one thing to note, these allocations, aside from the last one on here, this Governor's Emergency Education Relief Fund, the Coronavirus Relief Fund, and the State General Fund dollars, those were allocated to the school district in early August. We didn't get those amounts until that point. We were actually in the midst of updating and providing to the board the 45-day budget revision. So much had changed with the governor's final budget. And we actually received guidance right before as we were completing and finalizing the board packet from the County Office of Education to reflect these amounts as revenue in the budget. These are all restricted resources. They're outside, they're in the overall general fund, but restricted. And so at the time in August when we did the 45-day, we recorded the revenue. And then on the expenditure side of things, with the guidance from the county, it was placed in supply. As the capital placeholder, so that we'd have that balanced revenues and expenditures. Because what was subject to was coming up with a plan. Although we received the dollars in August, we needed to have a learning continuity plan on how those dollars would be spent, but it had to be approved by the board in September. That was the contingency. So as you can see here, it says the funding requires the adoption by the board by September. And that was done on September 28th. And again, Dr. Alvarez will go through those key milestones regarding that plan. So you can see that the first resource there was about $2.4 million. And the funding is to be spent by September 30th of 2022. The second funding source, and I call these buckets, that's kind of for our lingo from an accounting standpoint. So the other funding source or bucket was this resource 3220. The district received $26 million in terms of the allocation. What's unique about this funding source is at the time, and the legislation, the way that it was written at the federal level, indicated that the funds had to be spent, and it was unique because it said the 30th of December of 2020. So the work we were doing as soon as the learning continuity plan was approved was working through with school sites to provide support with the intent to spend those dollars by December 30th. We had a lot of updates to the California Department of Ed, even including FICMAP. Mike Fine was reaching out to school districts. He reached out to me, reached out to others, how we were spending the dollars, the timing of it, because we had to expedite the spend down and work with our suppliers. Because a lot of things such as our computers and our student devices, we were dependent on the supply chain. As you can imagine, all that demand coming in from school districts and suppliers not being able to deliver timely by this deadline. So a lot of that information helped, and as we as a district too relay this to our federal legislators. So fortunately, with the work that was done over the winter holidays, that extension was included in that last legislation that moved the date from that December 2020 to December 2021. Now, Dr. Alvarez will go through that. We've been working through that. We've got a lot of that already accounted for. So we're tracking those expenditures as they come in. But we have our plan according for that. So that is our largest component of money that came in. The next one, and so those first two are federal related. So you can see from the resource number, when it starts with a 3, it's typically federal. This last item, the state general fund, was part of the state allocation. And so that was a little over $3.3 million. It has its own resource number. And then that funding source, we have until this June to spend those dollars. So again, we're very mindful of the timing of when these dollars need to be spent by. And so the last item was actually our first allocation the district received. This was back in May. This one was the one that was primarily also used for learning loss with student devices and helping support that effort, but also with PPE, with personal protective equipment. We have an allocation that was assigned for that, a little over $2 million. That $8 million was provided to us, like I said, in May. And then too, the plan and how that was to be spent was also developed. That funding source is intended to be spent by September 2022. All of this information, and based on feedback what we received, we work closely with the communications department to put this information. I think if Carolina, you can go to that link we have here, the district website. These exhibits that we're going to toggle over to, like exhibit number 1. And I know there was a public comment about having the budget plan. So if Carolina, you can probably scroll to the top. We've provided information. This was as of first interim, which is our reporting cycle in December. And you can see there on the header, it indicates first interim, where the team is now working through this, looking at our budget. There's been some slight adjustments. That's now going to be captured in second interim, which is the work we're doing right now to present to the board in March. So we'll have another update. One thing that we're going to also update is provide object codes. Like our supplies are usually our 4,000 or 4,200 object codes. So we're going to put that as a reference there too. But this is what the snapshot is. So this is in one place, the budget plan for each of those resources I just shared on that prior slide. And you can see here that protective equipment, personal protective equipment, the dollars that we had assigned there, the teaching and learning component of it, and so forth. So as we go through that, and then I think, Caroline, if you can scroll down to the bottom. And so this resource 3215, same thing. And again, things have evolved because we've also had, some MOUs with our bargaining partners. So we've made some updates, and so that's going to be reflected in our next iteration. But this one here specifically, if you could pause right there, Carolina, this 3220, because I know we've received a lot of questions here on the staffing component. This exhibit, the next one, if you can look at one line item, we say our Launch Academy teachers. We have exhibit, I think it's exhibit 2. Is that right, Carolina? Then we provide the breakdown of how, again, by budget string. So you can see here where it was allocated to, what's the percentage of the FTE, and the support. And again, Dr. Alvarez will go into the specifics as to how these roles are supporting the work for students and addressing learning loss. So again, we've provided this information to the committee as a reference. And again, it is also available on the district website. And then with that, I think if you can then jump to exhibit number 3, all of this information, then we on a quarterly basis, but actually we're now getting more on a structure with the CDE with these quarterly updates. There were periodic reports we were presenting, I believe it was in September, then it was in October, and then November. There were a couple intermittent reporting aspects, and then we're now to a quarterly aspect. So you can see here, I think this was our first one, 3220. And if you scroll down a little bit, Carolina, These are all the templates. We actually have our staff member goes onto their website and populates this information. So this is what was presented back in September. So you can, as you can see, only 2.6 million had been allocated of that 8 million at the time. And so we hadn't spent those dollars. We hadn't, again, going back, it's been very fluid, a lot of movement from when these dollars were allocated in August to now. With us having to pivot and different guidance that we've been receiving from different agencies. But at that point in time, this was the report that we submitted for this particular resource. And as Carolina scrolls down, I think then it leads into subsequent reporting periods. So you can see they're very specific on this resource. How are those dollars? You take the dollars and you have to translate that to a percentage standpoint as to how it's falling in each of these categories. I guess she scrolls down. It'll probably lead into another reporting cycle. Again, as you can see, at that point in time, we hadn't had all that allocated into the different categories. I think it's by the time when you get to December, you already start to see some spend down, because by that point, we already obligated, let's say, our student devices. So you see an obligation category. You see what's already been spent. I think, yeah, maybe go to the next one. It might be the exhibit, is it 3B and 3C? I think each one was a reporting cycle. Yeah, I think this one was the one October. And then maybe it's 3D. Yeah, because now you can see that dollar amount changed to $8 million for 3220. So again, it's a lot of detail here. But again, the takeaway is as information has been evolving, as dollars are encumbered, one thing to know, when there are salary costs, particularly extra duty or what was allocated to school sites, we always have a little bit of a lag as to when those actuals get posted to the ledger. So as an example, any support work that was done for students in the month of December, that data did not get it gets processed in January from our payroll deadlines, and then will appear this month in February on the February pay cycle. And so you can see here, this is a timestamp of when all of these reports are submitted in accordance with the state deadlines. We actually work with the County Office of Ed too. They reach out to school districts, they review it to see where schools are at with submitting that timely. So we get notifications from them as well. So it's definitely a team effort. I wanted to present that to the committee. Okay. And then I think that if we can jump back, and one thing I wanted to note here as well is when we're looking at expenditures, we have worked with our True Course consultant to build us a query. We have Liz Reyes in our accounting department, our accounting manager. She works very closely with Dawn Prince, our purchasing manager, as well as Griselda Delgado. She's our director for state and federal. I know she was on just a little bit ago. They meet every week to review what requisitions or POs are still open that have not been matched with an invoice. So they follow up if it's pending to be received at the school site. Did they receive the goods? Did they, incorporate that into the accounting system so that we can get the vendor matched and paid? And so then that starts to translate into our actuals on the ledger. So that is a weekly process. And I know that Ms. Delgado works very closely with the principals and directors to help communicate that out. And it's something that I also shared during our cabinet meeting with stakeholders. So again, there's a lot of information here, but wanted to present this to the committee. And then if Carolina, you can go back to the presentation. And then from here, I'd like to then, if we go to the next slide, I'd like to transition this over to Dr. Alvarez, who's going to provide context on how the dollars were spent in connection with the Learning Continuity Plan.
Good evening. Thank you, Dr. Salkeld. Good evening, board members, subcommittee members. It's a pleasure to be here this evening. So as we prepared for reopening schools, whether in distance learning or in person, we really tried to approach this from a collaborative approach. And starting in the spring through the summer and continuing now, we have ongoing committees with our stakeholder groups. That's inclusive of all of our bargaining units and our DPAC, DLAC, and additional parent advisories. So we formed a reopening committee that really focused on discussing any types of plans, and we created the Sweetwater Reopening Plan for Distance Learning and in-person instruction. This plan was disseminated in July, and it sort of foreshadowed any type of probable opportunities that we had with our students and with our staff. We had to kind of forecast what situations were going to occur and how we were going to really use any of the learning loss mitigation funds to support instruction during this time. At the same time, we also normally do a local control accountability plan, and that was put on hold this year through Senate Bill 98. And what it did, it really joined the LCAP with anything that had to do with the learning continuity plan, which covered learning loss mitigation along with the LCAP funds. And so we incorporated this into our plan. The learning continuity plan really focused on all aspects of reopening, and we'll talk a little bit about what those are. We did have several board meetings and also DLAC and DPAC presentations for feedback and stakeholder input, and those occurred as early as September 14th. The last time that we actually took a review of the learning continuity plan occurred on December 14th. Throughout this entire process, a little bit different than what normally occurs, the LCAP has to be approved by the San Diego County Office of Education. The LCP, or the Learning Continuity Plan, which encompassed all of these funds, was a review by the San Diego County Office of Ed. And with their feedback, we incorporated the feedback that they provided into the finalized and revised plan. You want to go on to the next slide? So as I mentioned, there were quite a few requirements within the learning continuity plan, and it focused on, all of those aspects that would need to be implemented in order to have a very solid approach for instruction for our students. The first element was distance learning. What were we doing to address distance learning? And for us, as a school community, it really focused on two major implementations in terms of hardware and then also connectivity. Those were the two major elements that we had. As you may recall, we've had a pretty strong and robust one-to-one initiative, but we also had hardware that was aging and couldn't be sustained in a distance learning model without some upgrades or some additional supports. So a lot of the funds that we utilized were to approach distance learning. With in-person instruction, we wanted to ensure that we had all the safety mitigations in place. And so you'll see a major part of our expenditures had to do with personal protective equipment, with installing ionizers called needlepoint ionizers in classrooms, providing backpacks for sanitation across campuses. A lot of those materials, also including masks for teachers and students, gloves, any type of PPE and cleaning supports that would occur on campus. We also made it a concerted effort that as we were transitioning to potentially a digital platform, although our teachers have been using technology and different platforms quite extensively for many years, going to a full digital platform or even a hybrid platform really relied on a lot of teacher professional development. So we collaborated with our Teachers Association and our Counseling Association to provide professional development that met not only the academic needs, but also some of the social emotional needs of our students in terms of social emotional learning. The fourth element was the pupil learning loss, and we had to navigate through understanding, we've now been, at that point, we had been 6 months in a distance learning type model. And for the second semester of the spring of the 1920 school year, it was really all about trying to engage in social emotional learning supports, trying to mitigate any type of learning loss. But there were certainly gaps that occurred. And so part of that pupil learning loss was looking at assessments and supports, navigating and understanding where students currently were in terms of their academic needs and where we needed to move forward. All of this in the context of a pandemic. So that makes it a lot harder to assess. And some may say that, really the social emotional learning should be the focus. We're trying to maintain both and do both in a way that supports students. And then I mentioned the LCAP. The LCAP really focused, as you know, on our English learners, our foster youth, our homeless youth, our low-income students, and students with disabilities. And so we had to be very specific in our learning continuity plan, what types of supports we would be providing in addition to the baseline supports for our students. As you well know, teaching English as a second language across a virtual platform is difficult. So we provided some additional supports for our English learners to ensure that they were getting their needs met, both their academic language needs and also additional resources with their social emotional learning. Same with our students with disabilities. And you'll see, we'll talk a little bit about the supports that have been provided through our small group cohorts. The other element of those elements included in the LCP were the mental health components, and not only the mental health of our students, which is our primary concern, but also of our staff members and how we were meeting the needs of their emotional well-being. And then the last one, which is actually the first one we started with, was making sure that we were serving our families and providing those nutritional needs. By early June, we had served over 1 million meals to our families. Even when schools were completely closed, we still served meals throughout our campuses. At one point, all of our campuses were offering food services, and then we sort of centralized those services for these kind of cohort models with middle schools and high schools. But that continued to be a strong support for the community. So all of those elements were included in our learning continuity plan. Along with that, the budgetary considerations for each of those elements. Carolina, if you want to go to the next one. So those were the big categories, and some of the elements that were more of the specific services. As I mentioned, in the spring, we were in remote learning or distance learning. In the fall, we began with distance learning. But one of the elements that we thought was critical was how do we bring in those students that are struggling and need additional supports that necessarily can't be provided through a virtual medium. And so we created at each of our schools small group supports, and we call them cohorts. We hired additional teachers to bring at least one full day cohort to the school sites, to each of our school sites. Some of our larger high schools have up to 3 to 4 full day cohorts. And then we also had the opportunity to bring in after school supports and Saturday supports for our students in a Saturday academy type of approach, not a Saturday school where it's a punitive model, but one which was really focused on the skills and really supporting students on a day-to-day basis with their academic needs. And so that happened across the school district. We also saw that, having digital classes, for many of our students, they're doing fine, but we have some that needed additional support. And so virtual tutoring was also implemented. That was funded through the CARES Act fund, including after school and Saturdays, so that small tutorials could occur. And that's happening across the board at all of our schools. As you know, we also need to purchase supplies and materials for distance learning and in-person instruction. We needed to ensure that, for example, I work with VAPA quite a bit. We created kits for every single one of our students that was taking a visual and performing arts class, and those were picked up or delivered where students would have the resources and materials at home to, create, whether it was a ceramics piece or whether it was an art design, those materials were provided at home. We also needed to purchase additional equipment in terms of some lab equipment, some musical instruments, those types of items so that students wouldn't need to share and that they would be available at home. As I mentioned before, the PPE or the personal protective equipment was a large component of the funding to ensure safety for our staff and for our students. As we started bringing back our cohorts onto campus, that certainly became at the forefront of what we were doing, was to ensure that safety. We also had some additional barriers and other protective equipment that were installed at school sites for that. And I think one of the highlights has been the conversation about some of the salaries. And we have looked at utilizing our current staff with different functions that they normally did not have to do. And so our portion of our counselor salaries were included in that learning continuity plan and under the CARES Act, as were our teachers on special assignment. So for example, for our teachers on special assignment, at the end of last year, we weren't going to have any teachers on special assignment. What was seen with the pandemic, we transitioned to bringing them back on, and all they did was create distance learning lessons and courses to ensure that all of our teachers had a foundation for an online course when they came back to work in August or July. We also functioned with our community resource facilitators, which were normally supporting parents and staff, communicating with parents, but they really became critical in terms of highlighting and manning our hotline for support for parents, whether it was tech support, enrollment support, any type of needs that families had based on the pandemic, to ensure that they were given the correct information and the resources and tools to engage in school. Counseling groups were also brought in. Not only did we have the teaching small group cohorts, we also had counseling cohorts at sites, and every site at least had one, if not more. We also looked at providing additional mental health resources. And then, as I mentioned before, the computers and hotspots, not only for our students, but also for our teachers. We had a lot of first generation equipment that was great if you were in a classroom and you had other resources, but to function fully from a laptop that was 6 to 7 years old in a distance learning platform wasn't working. So computers and hotspots were also purchased for staff. And then, as I mentioned before, the professional development of ensuring that all through the year we had consistent support for our teachers to look at instruction and how to engage learners in a distance learning model. And then also that development of language acquisition for our English learners. And so that's been the focus of RPD over the last, almost 10 months now. If we can go on to the next one, please. So as Dr. Salkeld mentioned, the K-12 audit guide won't come out until later, I think later this spring. It is something that we have been waiting for. However, we are currently, our district was already scheduled for a federal program monitoring review, and we're doing an online review. However, they are coming to interview our staff. And so we actually have a site visit for our district, and they'll be here April 19th, 20th, and 21st. We have an upload that we need to do for all of our funding that is federally provided, and that will occur in March. We've been in consistent connection and conversation with not only the lead auditor, Jessica, but also each of the categories for all of our Title I monies, for our adult programs. Every single program has a lead, and we've been connecting with them to ensure that everything that we're doing with the CARES Act monies are in compliance. That's inclusive of duty statements that we've created for any of those positions that have been funded either a portion out of the CARES Act monies or in full of the CARES Act monies. We have duty statements for each of those, and then there's also time accounting logs that are signed. And what that time accounting log is a certification by the individual employee that they've completed a specific duty and during that time period and that percentage of the duty. So if we could maybe go to the next slide, we can go over a little bit about the substantially different use. So part of that compliance is that you're really looking at how that position is substantially different than what their normal duty statement is. And so as part of that process, we reviewed all the duty statements for every single employee category, and it ensured that that substantially different component met the requirements of the law and within the function of what they were doing. So for example, with the counselors, we reviewed their duty statement. We looked at what they were doing in distance learning and distance counseling, and then also had the federal program lead review each of those documents to ensure that we were in alignment. You want to go ahead to the next one? So I don't know if you can make this a little bit bigger, Carolina, because it's I don't know about you, but I know I'm going blind from being online. So each of our positions, is it blinking for everyone else too?
Yeah,
okay.
I don't know why.
Okay, if you want to just go back to the regular size, maybe it has something to do with that.
Let me try that, Dr. Alvarez.
There you go. I think it stopped.
It was stopped.
It was stopped for a second. So with the compliance piece, we do have to generate what's called TALs, the time accounting logs. And as I mentioned, that's a certification. So with our counselors, for example, our counselors for the first part of the year, for the first semester, 25% of their salary was attributed to CARES Act. And the other 75% was out of our local control accountability supplemental and concentration grant monies. And so with this, one of the elements that we saw them doing as part of SB 98, there was a re-engagement piece. And what that said is that students who missed more than 60% of instructional time, either asynchronously or synchronously, had to have a re-engagement plan. And so counselors have been focused on that, focused on getting students reconnected to school, getting them back into their courses, and then figuring out what are their needs, what type of pandemic-related support services are needed in order to help the student and the family. So each of our counselors and anyone who is being paid for out of the CARES Act funding is completing TALs or time accounting logs for the 6 months under which they were funded out of these funds. We do have some staff that will continue to be funded in the spring and that primarily is attributed to two sets of staff. They include our Learning Center teams and then also our Launch Academy teams. Both of those programs were not going to be in existence based on our budget that was completed in June of 2020. With the pandemic, we certainly saw some need for having additional resources and a different learning environment for students. And so both of those programs were, one was created, which was the Launch Academy, and then the Learning Centers were re-implemented at a smaller scale to ensure that we were meeting the needs of our students.
Mark Skavarna, San Diego County Office of Ed.
Is now exiting.
Huh. Okay.
Okay, and then if we want to go on to the next one, please. And this just goes back to that substantially different. This is one of the examples that I was mentioning before about the community resource facilitator. It really was, once again, reconnecting students, tracking students who could not connect, offering computer support to families. All of those elements are elements that our CRFs did not do in the past. They were overseeing that hotline. They were working with food distribution. And so all of those elements we felt under the guidance of the CARES Act in terms of those substantially different activities. And as I made mention, we did that for every single one of our positions, which was funded or partially funded through the CARES Act. And we continue to monitor our learning continuity plan. That is the guide. We continue to assess how our students are doing, not only through assessments that are ongoing, both formative assessments that are happening in classrooms, but also some of those summative assessments. At this time, we still, per the state guidance, we still are held accountable for the Smarter Balance assessment exams. I'm not sure if those are going to actually be implemented or not, but at this time, that is what we've been told. All of that will help at least assess where we are. If they're not continued with the SBAC, we do have internal assessments. We have done our end of course assessments, our performance tasks, and then we've also used internally the interim assessments through the SBAC so that we can see where our students have been with the learning loss, where are the gaps, and where we can continue to support. So all of this comes together in that learning continuity plan, which is very comprehensive, has had extensive feedback, extensive input, and we continue to try to provide ongoing supports for not only our students, of course, the primary supports, but also for our teachers and staff.
Thank you, Dr. Alvarez. Are you are you finished with your?
That is, the rest is really for questions.
Okay, that's
If
great.
I could add real quick, Trustee Hall, just one comment too, in terms of kind of closing. What we provided, and again, as things are evolving, this is the CARES Act that has been allocated over the last, starting with May into August. We actually just received an update late last week from the California Department of Education. This is what we're calling ESSER Part 2, which is part of that legislation at the federal level during the winter holiday. That allocation was finally determined and shared with school districts. For the districts, could be a little over $34 million. And so that too is going to be another new resource number. And it appears that the district will have until September 2023. Again, new information evolving, coming forward our way. We actually sent an inquiry to the County Office of Ed to ensure if that's something that they also want us to reflect in the second interim, because it's just, again, new information that came about. And so we're going to look at that budget plan too and develop that. So that's new information.
Thank you very much. So I'll look forward to hearing, more about that latest allocation of funding. So I'll entertain questions now. Is there any questions from our committee members? It's pretty thorough information and walkthrough. I mean, I'm very glad. I just want to say before we take the questions, thank you for the work. Thank you, Dr. Sockeld and your team, for providing all the fiscal information, for putting that on the district website. I know, Dr. Aguirre, I discussed that with you over a few months ago, and I really appreciate your help in getting that done. I appreciate the staff's work, and Dr. Alvarez for the educational team. Thank you for the work you're doing to reach our students as best we can. So now, Dr. Alvarez, I'll let Mr. Torres ask a question. Go ahead, Jerome.
Well, first off, let me just echo what Member Hall said. I want to commend staff for all the information provided. Dr. Salkal and you, Dr. Alvarez, it was well done. I do have some technical questions, though, if I may. Okay. So one is on the staff provided backup spreadsheets to corroborate the first interim budgeted expenditure report, which you went through, okay, which is now, Dr. Salkal talked about a second interim report that's going to be provided to the board in March. Now, you provide a whole series of spreadsheets to corroborate the budgeted expenditures in each resource, okay? Now, I'm just focusing only on resource 3220, which is the Coronavirus Relief Fund, okay? Unfortunately, missing were spreadsheets for some of the listed staff, budgeted staff expenditures. And I wanted to point out to you, because I presume it was just an oversight, because the ones that were missing was small group supports, school supports, independent study, and VAPA. So just, if you're going to throw out spreadsheets, okay, make sure all the spreadsheets are included. So the other thing too, but in the first interim report, is that you also have listed on page 2 site allocations, and this again, resource 3220, which is the Coronavirus Relief Fund, and I'm really focusing on that fund, okay? So a site allocation of $3.1 million, and it states for students with disabilities, okay? So the question I have is this: is that $3.1 million, that site allocation, solely for special ed students, or does it include expenditures for also what Dr. Alvarez suggested, small group support cohorts? What is that $3.1 million site allocation for? Could you expound on that real quickly?
I think we could share both, Dr. Alvarez and I. So to your point on that 3.1, that was one calculation. There were two calculations. There was a kind of a baseline based on enrollment, and then there was another add-on to get up to the totality of the 3.1s to meet all of our student needs per school.
And Mr. Torres, that does include some of the small group. Remember in there I said that there were small group cohorts. There were also tutorials. Those are encompassed within those site allocations, where principals have the discretion to support the small groups, the Saturday academies. It also encompassed the supports for counselors to have small group cohorts. Those were included. And I did want to respond about the VAPA. The VAPA wasn't a staffing component. The VAPA was more materials and resources and supplies. So there wouldn't be an element that would have the staff or the positions, because there were no positions funded for VAPA out of this.
Okay, that $125,000, okay.
Yeah, that
Sounds
was
good.
materials. So they bought, for example, tuba covers so that students could, they bought additional musical instruments. They bought those kits. Those were the supplies that were purchased for backup.
Okay, understood. Okay, now, again, this is solely on Resource 3220. Now, I don't know of the other members. I'm one of those policy wonks. I go through all the materials, in detail, and Dr. Selkeld and the others can tell you that. Now, in the materials, there were 3 reported funding cycles: cycle 1, 2, and 2.5. Okay, and the related expenditure reports associated with those 3 reporting cycles. Now, what kind of threw me off was that for the expenditure report of October the 1st through October the 31st, okay, which I presume, wait, let me back up. The funding cycle 2.5, I presume, is the expenditures for October the 1st through October the 31st of 2020. Now, there was a little discrepancy in that there was, in one of your documents, 3 funding reporting cycles for 3220, but there's 4 budget reports that were included in materials. Okay, so the question I have is this: if you go to page 199 of our agenda, 199. You'll see that there's a summary page of $3 million, over $3 million, that was expended in the month of October. Yet, in a financial report, the 4th one I'm talking about, for October the 1st through December the 31st of 2020, the question I have is this: is that listed expenditure for that period, which is $10.8 million, okay, for that time period, does it also include the $3 million that was separately reported in that other report for the month of October? You with me?
Right. So, Committee Member Torres, what they do is it's a cumulative. We provide an update that's cumulative. So through that point in time in October, it's a snapshot that you were saying, I think 3 million or so. And then through December, there was more activity because we had already obligated some different
So
devices.
it does include the 3 million. Okay.
So it does look at it cumulative because that's how those percentages are set up to continue a rolling update on the spend down. And that's what you'll see the amount that says you're.
Yeah, I think it says that, right? It says that in the form
No,
as well.
no, it doesn't.
When
That's why I'm asking.
up at the top, it talks about it being a cumulative.
Okay, so the bottom line is it's all cumulative. So that 10/1 through 12/31 does include the 3 million. I just want to get the clarification. All right. So here's the question that I have, a follow-up. Okay, so you guys have been allocated $26.5 million, okay, which you received in August 2020, okay? So based on these funding reports that you included to us, that you provided to us, that were given to CDE, is that there's a remaining balance of $13.7 million of unexpended coronavirus relief funds, resource to 3220. All right. So the question that I have is this: have you guys developed a cost analysis to implement the key timelines for transition under the learning continuity plan that begins on page 229? Okay. You have like a series of, okay, this is what we're hoping to do. If we get to 10%, 20%, 50% of students, the hybrid learning plans that we're going to develop, and then full 100% of students in our school. Have you guys developed a strategic or a cost analysis of how to expend that $13.8 million to implement those various scenarios? Or is the summary table that's included in pages 234 to 235 is an aggregate summary table? Is that your cost analysis to implement these various scenarios? I'm trying to, find out, have you guys thought about how much money it's going to cost to do what you're talking about in that learning continuity plan? Are you with me? Am I making sense?
So if I could add, Trustee Hofer, to address Committee Member Torres's question. So one thing I mentioned that earlier in the presentation too is those reports will show our actuals, right? So there is a lag. So you may see, so we have our budget plan that was in Exhibit 1. So we have our mapping of our plan. So when we're doing these reports, say as of December, there's payroll costs, like I was mentioning about some of the student support work that we had done. Those payroll costs are not going to appear until February's payroll cycle when that posts. So I don't want to say that 13 million has not been accounted for. There's going to be a lag as things get caught up, and maybe, we do have purchase orders and things that we encumber, but when it's some of these payroll costs and on these reports, it's going to understate it until we get caught up. So Ana Maria knows this very well, that we're reaching out to the school sites. Please make sure you process your timekeeping. We've got all these reports to account for. Right. But yeah, then that is that contingency. We're monitoring right now. The team is in the midst of the second interim work, seeing how are we doing to this budget plan.
I'm with you. I totally understood.
I just want to make sure that it doesn't appear that we've got this amount. There could be some left, and that's where we're going to be working with Dr. Alvarez's team and Dr. Aguirre. But we've got a plan. Now it's getting all these expenditures caught up. And with some of it being like with $3 million allocated at the school site. Some of it's personnel cost support through extra duty. Other, again, according to our bargained agreements, others could be our purchase orders that are still open. And that's that weekly review.
I'm with you 100%. So aside from the issue of cost reporting, what I'm trying to get at is, has a cost analysis been done on the various scenarios that you've outlined in your learning continuity plan when you go from stage 1 to stage 2 and then full 100% attendance? Has that been costed out with regard to whatever unexpended monies there are in resource 3220? That's what I'm trying to get at.
So let me take that question, Mr. Torres. The reality is I recall you used to work over at Unified, and you know how things evolve over time. So the reality is, as the guidance evolves from the state, and we have multiple agencies, as you're aware, that we respond to and follow guidance, California Department of Public Health, Health and Human Services, we're going through that process. And so for us to go through and put a number out there would not be, I think would not be good practice. And here's why. Because the reality is that the guidance we continue to receive evolves fairly quickly. I mean, just about a week ago, less than a week, the CDC at the federal level provided guidance. So that's to say, we are in a process where we are responding to the changing circumstances. So for us to put out there a number, I think, again, would not be representative of the circumstance. That's just the reality of that we're all dealing with. And then further, once we receive this guidance, we're called upon to bargain, whether it's impact or effects or decisional aspects of where we would move forward. Now, we are working in a way that as soon as this guidance arrives, we already have anticipated what that could look like. But at the end of the day, we need to make sure we're proceeding in a way that's compliant with all the rules that we're under. And so for us to put a number out there, we could, to answer your question, but I don't think it would be good practice, because I don't think it would be representative of the circumstances we're going through. I just wanted to share that. And that's what we're working through.
Okay, I understood. So final question, okay? And now there has been a lot of undue consternation about this whole issue of coronavirus funds being used to supplant the general fund. And remember, at our last meeting, I had actually pointed out on the record, according to the CDE guidelines, with regard to the GER funds and the CRF funds, the Coronavirus Relief Fund, there is no supplement versus supplant provision and how those monies are expended, okay? And I made that very clear, okay? But yet, a lot of people who wouldn't know otherwise, make these allegations, all right? But yet, Dr. Salkeld said something a little bit earlier that kind of took me by surprise. Again, and going back to my old, when I used to work for San Diego Unified, way back in the day, is that she said that, and correct me if I'm wrong, Dr. Salkeld, that the CRF funds are restricted funds, okay? Now, is that there's a difference, going back to my old days, and Member Hall can probably correct me, there's a difference between restricted funds and unrestricted funds. Unrestricted funds can, by its very nature, be used as part of the general fund. A restricted fund cannot. So I want to get this cleared up, the air cleared, if you will, that the $26.5 million that's been allocated to Sweetwater is not being used to supplant the general fund. Correct or incorrect?
So, Mr. Torres, I will push back on the premise of that question because I do believe the premise is flawed. As we have made, and as you pointed out, the question about supplanting versus supplementing. Whenever we decide on an expenditure, we always work with our County Office of Education to ensure that we have an external check on our expenditures. Mm-hmm. Now we have implemented those time accounting logs to ensure we're accurate, and this will be part of the FPM when it comes around, the Federal Program Monitoring Review. So this is part of our process. We've put the information out there, and I will not speculate as to how or why people are thinking what they are thinking, other than we put information out there so it's clear and evident. The work that we're doing, whether they speculate it's this or that, we want to make sure that we are working in a financially responsible manner, and I'll leave it at that. All right, that's where the choices that we make are in line with our goal to ensuring that we're financially responsible. We're using these funds as they were meant to be used. As you may recall, one of the elements of this funding was to attempt to mitigate the amount of unemployment that was out in the community, in the broader community. That's not necessarily how we're looking at it, but I do want to say that we're working with our partners to ensure that funding that we are using is appropriate. I'll ask Dr. Salkeld to expand on that if she'd like, but I just wanted to show that.
I would just say also, Dr. Aguirre, restricted funds are part of the general fund. If the resource codes that are listed on the second page of this document, the one with all the 3220 that you're concerned about, mm-hmm. Those are restricted resource codes, which identify it as federal dollars. Mm-hmm. So it's not that, and I think from what I heard, Dr. Salkeld and Dr. Alvarez, when they walked through the reports, they were talking about substantially different activities that this money is supporting. Mm-hmm. So we're never going to get to the point where some people do make a lot of, they'll come on and do a lot of comment, and not always is that comment really done in a way that is from a standpoint that is really, open, or maybe they just don't have the correct information, but it seems to fit a dialogue that they want to put forward. And I don't think it's really fair to our staff. They just laid it all out there, and they've been laying everything out there. And like they said, substantially different activities, supplanting, in my opinion. And I've worked with a lot of those federal dollars for many, many years. And I've worked with federal monitoring on those dollars. And so I understand it quite well. And so I think that they've explained it very clearly. They're not supplanting. They're using it as the guidance has been put forth to meet the needs of our students and as we know them to be, which is always fluid at this point, especially with the coronavirus. So I mean, I'm satisfied with what they've put forward in their report.
Yeah, I just want to make it very clear to everybody that's on this video Zoom meeting, I'm not trying to infer anything. What I'm trying to get is clarification for anybody that's maybe viewing outside of us active participants. That's it, okay? I want to, as I said, I wanted to clear the air, all right? So I'm not trying to infer anything by my question. All right, so let's just leave that there. So other than that, thank you again for the information, and Dr. Salkeld and Dr. Alvarez, I really appreciate it.
Thank you, sir.
President Segura, would you like to ask a question or have a comment?
Just a comment. I just wanted to let Dr. Salkeld, Dr. Naghetti, all the doctors there, Dr. Alvarez. No, I appreciate that. That was a very detailed report you gave and you walked through, and I truly appreciate it. And it's out there. And I know, that the CARES Act, I mean, it's such a fluid, situation that we're going through. And I know we're not making decisions in the vacuum in terms of how to spend it. We're consulting and, and getting things checked out. So I truly appreciate that. I appreciate the work that we're trying to do to, to better serve our students while they're over in the distance learning mode. And it's just, I would have never thought, I could have never saw this coming. That's for sure. None of us could. And, I just can't believe that next month we've done this for a year. And I think we've done a lot to try to, serve the students as best we can with what we have. And I just want to appreciate all that information you put out there. Thank you. And thanks everybody for the questions too. I appreciate that.
Thank you. Mr. Gutowski, do you have any comments?
Yeah, thank you for the well thought out process and the very detailed plans that were presented today. So hats off to staff and serving our community and serving our students with the resources that we have entrusted to us. So thank you.
All right, thank you very much. We really appreciate your time. All of you, you've been working hard and under really conditions we've never experienced before in my lifetime, and I'm older than all of you. But I think we really do want to express our appreciation. These are challenging times for staff, and we don't forget, is having all kinds of things on their plate right now they have not experienced before, and they've done a tremendous amount of work, either be it in distance or in person. So I really appreciate that, and thank you very much for the presentation. The next thing, then we'll say goodnight to Dr. Alvarez. So the next thing we'll go to is our meeting minutes. I trust that you all read through the meeting minutes and are familiar with them, and if that's all right, great. I'll second that motion. Are there any objections to approving the minutes? No? All right, then we'll have a roundtable. Would anybody have anything for the roundtable? All right, then I'll take a motion to adjourn our meeting if there's no more comments.
So moved.
All right.
Thank you, everybody. Good night.
Thank you.
Good night.